All right, we're live. We're moving on, doing more accounting. Fuck yeah, dude. Hey. Session timed out. Reload. This is kicking a little bit. Give me a little bit of energy here. I don't need more. Bartending here. Fucking gay as fuck, but these oppressors, they insist that I don't drink and have fun and express myself. So needs to be taken down a few pegs. Dial it back a few notches. Just make things fucking livable again. We're on it. Yeah, police are going to be policed. Law enforcement's going to be put in check. So enjoy it while it lasts. Because y'all fuckers aren't getting away with your fascist bullshit forever. Actually, I'm gonna put a stop to it real fucking quick. So, like I said, enjoy it while it lasts. It's not gonna last long. I'd recommend getting out before your name gets put on the list. So, it's strongly advisable. Anybody still in there, name's gonna go on the list, and you're gonna be complicit and charged as well. So, yeah. There's going to be reparations and consequences for everything the government's been doing, especially law enforcement. That's the particular target right now for litigation. And other diplomatic resolutions, again, nonviolent. We're not attacking the people. Forgive them, Father, for they know not what they do. It's more just the underlying mechanisms and emergent properties of the systems they put in place, in which we need case studies and longitudinal studies and follow-ups and deeper analysis. So refinement. Not full-blown revolution, just reformation. It doesn't require anybody going to war or anything. We can not be extreme. Pragmatic, stoic, virtuous. We're going about things the right way. We're not being impulsive. We're doing shit, crazy shit, all right? We gotta lock in. We gotta make sure we do the shit the right way. Start fucking cooking. Here we go. I'm just gonna go to the questions. I feel like it's wait, no, I was almost done reading. Hold on. I was almost done reading. I can finish reading this shit. Here we go. We don't. Sir, man, it, AI, system, computer program. McGraw-Hill. Try to finish this reading. We were on, is it cost flows? Oh, we were doing read aloud. Okay. Schedule of cost of goods manufactured. There we go. Prepare a schedule of cost of goods manufactured and explain its purpose and links to financial statements. Manufacturing activities are described in a report called a schedule of cost of goods manufactured, also called a manufacturing statement. Shit. I hate that. Somebody needs to figure out how to fix sneezing. Somebody needs to make it go away forever. I don't want sneezing anymore ever again. Just give us this alternative so we can get rid of all the shit inside of us without doing gross shit like that, just spraying germs fucking everywhere. Like, it's nasty. It's weird and gross, and like, I feel like there should be a way to fix it. Actually, cybernetic augmentations. Let's take that peanut butter and jelly sandwich, take that peanut butter, replace it with some lettuce, take that jelly and replace it with some meat, and then take those buns and replace it with like a wrap and some bacon. Create something new and different, better. Weird analogy, but here we go. This schedule lists the types of amounts and amounts of costs incurred in manufacturing. Schedule of cost of goods manufactured to plan and control manufacturing activities. To provide timely information for business decisions, the schedule can be prepared monthly, weekly, or even daily. Exhibit 18.14, Schedule of Cost of Goods Manufactured. We got Rocky Mountain Bikes, the scheduled cost of goods manufactured for year ended December 31st. First off, we have direct materials. These include raw materials inventory beginning, raw materials purchases, raw materials available for use, less raw materials inventory ending, and finally direct materials used. Then we have direct labor. And number three, we have factory overhead, which includes indirect labor, factory utilities, repairs such as factory equipment, property taxes for the factory, depreciation expense for the factory, and total factory overhead. Four, we have total manufacturing costs, add work in progress or work in process inventory beginning, total cost of work in process, less work in process inventory ending, and cost of goods manufactured. Indirect materials are $0 in this example. If there were indirect materials, we would subtract that from materials used to get direct materials used, and indirect materials would be listed under factory overhead. So raw materials inventory, we have the beginning and purchases and ending. On the right side of this T account or T thing, we have direct materials, okay, MTLS materials. The schedule has four parts: direct materials, direct labor, overhead, and cost of goods manufactured. First is compute direct materials used. Add beginning raw materials inventory of $8,000 to the purchases of $86,500 to get $94,500 of raw materials available for use. At year end, a year-end count of inventory shows $9,000 of ending raw materials inventory. If $94,500 of materials were available for use and $9,000 of materials remain in inventory, then $85,500 direct. Compute direct labor used. Total direct labor costs are $60,000 for the period. This includes wages, payroll taxes, and benefits for workers who make bikes. 3. Compute factory overhead used. The schedule lists each factory overhead cost. All of these costs are indirectly related to manufacturing activities. Period expenses, such as selling expenses and general and administrative expenses, are not reported on this schedule. Total factory overhead is $30,000. Compute cost of goods manufactured. Total manufacturing costs are $175,500 times $85,500, or actually, hold on. Sorry, not times. It's $175,500, or in other words, $85,500 plus $60,000 plus $30,000, the sum of direct materials, direct labor, and overhead. We take this $175,500 total manufacturing costs and add the $2,500 beginning work in process inventory to get total work in process $178,000. Then we subtract the $7,500 ending work in process inventory to get cost of goods manufactured of $170,500. Cost of goods manufactured, or COGM, is also called net cost of goods manufactured or cost of goods completed. This chapter's raw materials inventory excludes indirect materials. This aids students by simplifying the flow of costs in the first managerial chapter. The next chapter introduces indirect materials. So we have the work in process inventory on the debit side, beginning of $2,500. What is that again? Total manufacturing costs, $175,500, and then on the credit side, we have cost of goods manufactured, $170,500, and the ending amount, $7,500. Key calculations in the schedule of cost of goods manufactured follow. Total manufacturing costs, those go into, that's just they're showing. Manufacturing costs equal direct materials plus direct labor plus factory overhead used. Cost of goods manufactured equal total manufacturing costs. Okay. Cost of goods manufactured equal total manufacturing costs plus beginning work in process inventory minus ending work in process inventory. Because you're not counting what you have left, you're counting what you've sold. And once it's sold, then becomes an expense. All right, locked in, cool. Estimating cost per unit. Managers can use the schedule of cost of goods sold manufactured to estimate per unit costs. For example, if Rocky Mountain Bikes makes 1,000 bikes during the year, the average manufacturing cost per unit is 170. Hold on. The cost per unit is $170.50, computed as 170,500 divided by 1,000. Manufacturing cost flows across accounting reports. Cost information is used in financial statements. Hold on. Never mind. If I press the read aloud, it's literally going to start at the beginning. I was going to say I could switch, like alternate between paragraphs, and that might be kind of cool, but apparently it's going to mess this up. Manufacturing cost flows across accounting reports. Cost information is used in financial statements. Exhibit 18.15 shows how product costs affect financial statements. Direct materials, direct labor, and overhead costs are the schedule of cost of goods manufactured. The cost of goods manufactured from that schedule is used to compute cost of goods sold on the income statement. The ending work in process inventory is carried from that schedule to the balance sheet, and the ending finished goods inventory is used in computing cost of goods sold on the income statement and is also part of current assets on the balance sheet. Manufacturing cost flows across reports. Rocky Mountain Bikes schedule of cost of goods manufactured for the year ended December 31st. We have direct materials used, direct labor, factory overhead, total manufacturing costs, work in process beginning, total cost of work in process ending, and cost of goods manufactured. Rocky Mountain Bikes income statement for year ended December 31st. Sales, cost of goods sold, finished goods beginning, cost of goods manufactured, finished goods ending, cost of goods sold, gross profit, selling expenses, general and admin expense, and net income. So that's the income statement. And then for current asset, Rocky Mountain Bikes current assets section of the balance sheet as of December 31st, or on December 31st, since this is a snapshot. Cash, we have accounts receivable, net, raw materials inventory, work in process inventory, finished goods inventory, supplies, prepaid insurance, and total current assets. Let's watch this video.
Compute the following three cost amounts using the information below: direct materials used, cost of goods manufactured, and cost of goods sold. Direct materials used is the cost of direct materials transferred from raw materials inventory to work in process inventory. Cost of goods manufactured is the cost of goods completed in the current period and transferred from work in process inventory to finished goods inventory. And cost of goods sold is the cost of goods leaving finished goods inventory and going to the customer. The cost of these goods are expensed on the income statement. So let's set up the T accounts for raw materials, work in process, and finished goods. The beginning inventory of raw materials is $15,500. The beginning inventory of work in process is $29,000, and the beginning inventory of finished goods is $24,000. During the current period, the company purchased $66,000 of raw materials. These costs are debited to the raw materials inventory account. Total cost of materials available for use is $81,500. We subtract the ending inventory of raw materials, $10,600, to calculate the cost of direct material.
One second, a little chilly. Very lovely. Yeah. I haven't seen her in years.
Materials used, $70,900. $70,900 of direct materials were transferred from the raw materials inventory to the factory work in process. The cost of the direct materials are added to the beginning inventory, along with the cost of direct labor used, $38,000, and factory overhead, $60,000. The total cost of work in process is $197,900. We subtract the ending work in process inventory, $44,000, to calculate cost of goods manufactured, $153,900. $153,900 of goods were transferred from work in process into the finished goods inventory. The beginning inventory of finished goods plus cost of goods manufactured equals cost of goods available for sale, $177,900. We subtract ending finished goods inventory, $37,400, to calculate cost of goods sold, $140,500. $140,500 of merchandise was sold to the customer in the current period. The current assets section of the balance sheet includes the three inventory balances: raw materials, work in process, and finished goods. The income statement reports sales minus cost of goods sold. Next, we're asked to prepare a schedule of cost of goods manufactured using information in Part A. Total factory overhead used includes indirect labor of $25,000, depreciation expense of $32,000, and factory utilities of $3,000. A schedule of cost of goods manufactured can easily be prepared using the inventory T accounts from Part A. We begin with the cost of direct materials used. Beginning raw materials inventory plus raw materials purchases equals cost of raw materials available for use. We subtract the ending inventory of raw materials to calculate direct materials used, $70,900. We add direct labor, $38,000, and factory overhead, a total of $60,000, for a total of $168,900 of manufacturing costs in the current period. We add the beginning work in process inventory, $29,000, to calculate the total cost of work in process inventory, $197,900. We subtract the ending inventory of work in process, $44,000, to calculate the cost of goods manufactured and transferred to finished goods, $153,900.
Tired of reading it loud. So, yeah, office hours is still open if anybody has questions about anything, comment, but no viewers. So if I see anything pop up, I'll try to respond, but assignments. Excuse me, sorry. Uh, Need some munchies. Need something to snack on. So here's one thing. If you've never seen these, they're selling these at Costco right now. I'm not even sponsored at all for anything, but dude, these are the shit. Broadcasted that into the world. Jackfruit chips. These are amazing. A little pricey at like 10 something, 10.70 something, I think it was. But goddamn, I feel like even though the price is a little bit higher, the worth that you get from it, the flavor, the nutrition, the lack of all the bullshit ingredients, like all the extra fats and artificial ingredients. Dude, look, like there's literally one ingredient. I was looking around, I'm like, what are all the ingredients? Like, if it doesn't have anything in it, what's it made out of? Like, usually you see stuff and it's like a bunch of artificial shit. No, look, one ingredient, ripened jackfruit. Literally one ingredient. I'm like, all right, healthier. And plus, they're filling too. Like, they're not like chips where you just eat them and eat them and eat them and eat them. Like, they just turn into fat. Like these, like you eat like, I don't know, like a little cup of them. Like, dude, I'm full. It's like they're filling. Antioxidants, no artificial ingredients, no added sugars, and they're gluten free. For all those with celiac, what do you call it? Disease? Yeah, no, these are good. What was that? Buy some ripened jackfruit fruit chips by Phenomenal Foods. Right there, looks like that. There you go. Screenshot if you want. These are the shit. Yeah, if these guys want to hire me to market this, I will gladly accept. I will market the shit out of these. These are good. Oh, needs more of these. More of these. All right. Improvement rejects the notion of good enough and challenges employees and managers to continuously improve operations. This is something the government needs to do. And they're not doing it, so we're going to step in. Drastically. And ASAP, as soon as possible. Let's make some changes, buddy. Changes for long-term interests. The big. All right. Anyway, look at my brain forming connections. Oh, well. Hold on, hold on. Oh, excuse me. Oh, I hate my nose so much. God damn. This is my shit. Stop doing your own thing. Stop being itchy. Hey Google, what are fiduciary duties?
On the website thecorporategovernance.institute.com, they say, fiduciary duty refers to someone who manages someone else's money or property. As a fiduciary, you are required to manage the assets for the benefit of the other person.
See? I'll tell you full already. Got like a little bowl with the chips. Done. Filling, nutritious. Love it. Oh shit. Don't kick me out. I'm literally looking right at it. Damn. What the hell is you doing? Nearly all large companies report on ESG activities. Many of these reports are available on company websites. Several worldwide organizations have developed ESG reporting frameworks. The Global Reporting Initiative, or GRI standards, are the most widely used. GRI standards guide companies in communicating the impact of ESG reports. Global clothing brand Guess uses GRI standards to report the following in its recent ESG report. Guess's ESG report excerpt. E for environment is the total energy consumption in gigajoules. Current year, 347,767. Prior year, 328,634. S, social salary ratio, women to men. Current year, 96%. Prior year, 94%. G, governance, female top level management, percent of total, current year 30%, prior year 31%. Guess reports that it used more energy in the current year, and its female employees are paid 96% of the salaries paid to men and make up 30% of its top level management. Managerial accountants are involved in collecting, verifying, and reporting and analyzing ESG data and activities. Like many companies, Guess's ESG metrics and disclosures are viewed by an external audit firm with expert accounting skills. Ooh, there we go. Another page done. God damn. Just push-ups. Switch it up a little bit. Hey. Ready. Back up to 40 by next week, 50 the week after. I don't know. I feel like it's just time consuming, so I just do bigger weights when I hit the gym. Ugh. Oh, here we go. I'm gonna do the read aloud. Wrap this shit up.
Page 667. Decision analysis. Raw materials inventory turnover and days sales in raw materials inventory. A1. Assess raw materials inventory management using raw materials inventory turnover and days sales in raw materials inventory. Managerial accounting information helps managers perform analyses to improve operations and profitability. Inventory management is one example. Raw materials inventory turnover. A manager can assess how effectively a company manages its raw materials inventory by computing the raw materials inventory turnover ratio as defined in Exhibit 18.17. Average raw materials inventory is. This ratio reveals how many times a company turns over, uses in production, its raw materials inventory during a period. A high ratio of raw materials inventory turnover is preferred, as long as raw materials inventory levels are adequate to meet demand. To demonstrate, Rocky Mountain Bikes reports direct, raw, materials used of $85,500 for the year, with a beginning raw materials inventory of $8,000 and an ending raw materials inventory of $9,000 from Exhibit 18.14, and parenthesis, raw materials inventory turnover for Rocky Mountain Bikes is computed below. Raw materials inventory turnover equals fraction $85,500 divided by parenthesis $8,000 plus $9,000 and parenthesis divided by 2 equals 10.1 parenthesis rounded and parenthesis divided by raw materials inventory turnover equals fraction $85,500 divided by parenthesis $8,000 plus $9,000 and parenthesis divided by 2 equals 10.1 parenthesis rounded and parenthesis. Days sales and raw materials inventory. A manager can measure the adequacy of raw materials inventory to meet production demand. Days sales and raw materials inventory reveals how much raw materials inventory is available in terms of the number of days sales. It is a measure of how long it takes raw materials to be used in production. It is defined and computed for Rocky Mountain Bikes in Exhibit 18.18. This shows that it will take about 38 days for raw materials inventory to be used in production. Assuming production needs can be met, companies prefer a low number of days sales in raw materials inventory. Just-in-time manufacturing can help lower days sales in raw materials inventory. For example, Dell has reported that it keeps less than 7 days of production needs in raw materials inventory for most of its computer components. Decision maker. Chief Financial Officer. Your company regularly reports days sales in raw materials of 20 days, which is similar to that of competitors. A manager argues that profit can be increased if the company applies just-in-time principles and cuts it down to 2 days. Do you drop it to 2 days? Black square. Answer. Cutting days. Sales and raw materials to 2 days might increase profits. Having less money tied up in inventory is a positive. However, if the company loses customers over out-of-stock inventory or if production is delayed, with costs, profits might decrease. Good management effectively balances those risks and rewards.
Requirement 2, prepare a year-end adjusting journal entry as of December 31st for each separate situation. Part A, we are told that bad debts are estimated to be $20,400 by using the aging of accounts receivable. The unadjusted balance in the allowance for doubtful accounts is a $1,000 debit. The journal entry to estimate bad debts using the allowance method is to debit bad debts expense, which is an income statement account, and to credit allowance for doubtful accounts, which is a balance sheet account. Preparing adjusting entries is a three-step process. Step 1 is to determine what the account balance equals. In this case, we are told the allowance for doubtful accounts has a current debit balance of $1,000. Step 2 is to determine what the account balance should equal. We are told that the allowance for doubtful accounts should have a $20,400 credit balance. Step 3 is to make an adjusting entry to get us from step 1 to step 2. To get from step 1 to step 2, we debit bad debts expense for $21,400 and credit allowance for doubtful accounts for $21,400. Part B, we are asked to alternatively assume that bad debts are estimated using the percent of sales method. We are again told that the allowance for doubtful accounts has a $1,000 debit balance before any adjustment. And we are also told that the company estimates bad debts to be 1% of its credit sales of $2 million. When using the percent of credit sales method, we do not consider the allowance for doubtful accounts balance. This means the journal entry to record the allowance is to debit bad debts expense for $20,000, which is 1% of the $2 million, and to credit the allowance for doubtful accounts for $20,000.
Summary, Tip Sheet 18. Managerial Accounting Basics. Planning, process of setting goals and making plans to achieve them. Control, process of monitoring and evaluating an organization's activities and employees. Managerial accounting, focused on the needs of internal managerial and executive employees. Financial accounting, focused on the needs of external users including investors and creditors. Cost concepts. Direct costs, costs that can be cost-effectively traced to a cost object. Examples for a bicycle include wages of bike maker, tires, seats, handlebars, cables, frames, pedals, and brakes. Indirect costs, costs that cannot be cost-effectively traced to a cost object. Examples for a bicycle include factory accounting, factory rent, factory supervisor salary, and factory insurance. Page 669. Direct materials, materials that are crucial parts of a finished product and that can be cost-effectively traced to finished goods. Examples for a bicycle include tires, seats, handlebars, cables, frames, pedals, and brakes. Direct labor, employees who directly convert materials to finished product and whose costs can be cost-effectively traced to finished goods. Examples for a bicycle include workers who convert raw materials into finished products, welding, painting, forming, and assembly workers who attach materials such as tires, seats, pedals, and brakes. Factory overhead, all manufacturing costs that are not direct materials or direct labor. Costs include manufacturing costs that cannot be cost-effectively traced to finished goods. Factory overhead includes indirect materials, indirect labor, and other indirect costs such as staples, glue, supervisor salaries, and factory insurance. Indirect materials, materials used in manufacturing that cannot be cost-effectively traced to finished goods. Their costs are often low. Examples include staples, glue, nuts, and screws. Indirect labor, labor needed in manufacturing that cannot be cost-effectively traced to finished goods. Examples include costs for employees who maintain and repair manufacturing equipment and salaries of production supervisors. Other indirect costs include factory utilities, water, gas, electricity, factory rent, depreciation on factory buildings and equipment, and factory insurance. Prime costs. Conversion costs. Product costs consist of direct materials, direct labor, and factory overhead. Product costs are added to inventory during production. After products are sold, these costs become cost of goods sold. Period costs, non-production costs linked to a time period rather than to completed products. Examples include sales staff salaries, office worker wages, advertising expenses, and depreciation on office furniture. Period costs are expensed in the period when incurred and reported on the income statement as either selling expenses or general and administrative expenses. Reporting. Raw materials inventory, materials a company acquires to use in making products. Work in process inventory, products in the process of being manufactured but not yet complete. Finished goods inventory, completed products ready for sale. Manufacturer balance sheet, current assets section. Rocky Mountain Bikes. Table summary. Table summarizes the current assets section of balance sheet for December 31st for Rocky Mountain Bikes. 8 entries along with their values are listed. Cost of goods sold. Manufacturer income statement. Table summary. Table summarizes the income statement for year ended on December 31st for Rocky Mountain Bikes, lists the values of 10 accounts listed in column 1. The following cells are empty. Row 1, 2, 7 through 11, column 2, rows 2 through 6, column 3. Rocky Mountain Bikes. Cost flows. Cost of goods manufactured, total of direct materials used, direct labor, and factory overhead costs for finished goods manufactured. Cost of goods manufactured computation. Schedule of cost of goods manufactured. Rocky Mountain Bikes. Table summary. A table titled Rocky Mountain Bikes, Schedule of Cost of Goods Manufactured for the year ended December 31st, lists the values of 17 accounts listed in column 1. The following cells are empty. Row 1, 6, 7, 8, 14 through 19, column 2, rows 1 through 5, rows 8 through 13, column 3.
All right, I think I finally got all the reading done, so I can go ahead and move on to the questions. Go ahead and start on the smartbook questions. Chapter 19. All right, we're gonna take a little break, maybe grab some lunch. It's already 4, damn. I woke up late today though, so grab some food, take a little break, come back, do another hour.